All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I am definitely so happy and grateful for all of you being here with us this evening as we take a look at the Forex market to see what's out there for us to take advantage of on the technical and the fundamental front. So, without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper for notes, and let's make sure that we do an awesome job of participating and engaging. It is the best way to learn. So, if everybody can hear me loud and clear and we are all ready to go for tonight's session, drop me a one and we can get things going. All right, awesome. And welcome to everyone who just joined us a second ago. Let me make sure that everybody has control over their microphone. As always, just be courteous to everybody else. If you're not making a comment or asking a question, let's make sure that we keep the microphones on mute. All right. So let's dive right in. Had lots of good price action today in the market. So let's take a look at the Forex factory. So we know coming into today, right, that the Swiss National Bank, hey, shocked everybody, right? 50 basis points. They hiked it. Okay, so you can see here they were negative 75%. Now they're negative 25%. So they do run a negative interest rate, but they just hiked it by 50 basis points. So inflation is grabbing a hold of everybody. Everybody's starting to feel the squeeze. Okay, and then we know today also that the Bank of England came through with the 25 basis point hike. So they held off from being more aggressive and trying to keep up with the Federal Reserve. But nonetheless, they still raised about 25 basis points. I think the market's gonna look at it overall as soft. So yep, it got a good run to the upside today based on the hike. But I'll be interested to see what that looks like going into next week, as it seems that it may just be pushing things to a high price before it starts to correct back to the downside when we talk about some of the pound pairs. And then we cannot pass up on what happened with Australia, because we saw the Aussie gain some strength off of the good labor numbers that came through. So you got 60.6 there, forecast 25. And then the unemployment rate was just a little bit off, but you saw that the Aussie got a boost today because of it. So as always, fundamentals are very important. And we know that it's tentative now with the Bank of Japan and the policy rate. I was reading some articles earlier, and most people are under the impression that the BOJ is not going to, be bullied by the rest of the central banks into tightening right now. So the forecast is for the interest rate to remain the same, but we'll see. A lot of people thought that about the Swiss National Bank as well. So we will see what happens as the news continues to develop this evening regarding the Bank of Japan and their policy rate, and then the press conference to follow. So we might get some good price action on the yen pairs. Don't know which way that's going to swing. So we'll wait and see. And then moving into Friday, fairly light day, but we do have Powell speaking again tomorrow. He did thing yesterday. Seems like initially, right, he had everybody sold, but then you come into today and we see, stock market today, Dow closes below 30,000 and Dow's Fed will avoid recession. I didn't take it yesterday as that anything he said that will lead us to avoiding a recession. I think that's where we're headed. So I don't know. The emotions are running high, especially after people are seeing what the Swiss National Bank did today. And like I said, even though it wasn't a super hawkish move, the UK hiked about 25 basis points as well. So everybody's trying to fight inflation. I think all the central banks pretty much came under agreements for the most part that it's going to be a unified move. I think the Bank of Japan is the wild card right now, though. So we will see trading economics. We see here U.S. stocks sink, and then just talking about pretty much what we said about the Bank of England, and then you had U.S. housing starts fall from a 16-year high, right? So things are tightening up. Interest rates are getting boosted. Mortgages are becoming more expensive. Inflation, when you talk about the material and the supply cost to build, starting to creep into that housing sector. So you see that it just fell from a 16-year high. So these are all just data points to show that things are tightening. But in New Zealand, right, the factory activity gains momentum. So that was pretty cool to see. They came in at a higher number than expected on the manufacturing index. So we'll continue to watch it. But hey, through all the mess and all the emotions, we had a relief rally yesterday in the market, and then it's down today. I tell you what, no matter what's going on, those Fibonacci, that sequence plays out nonetheless. So that's what I'll choose to follow on the technical side. So good evening, Ebony. So let's dive into the charts. First of all, let me make sure, get everybody connected on here. Casey, good evening. Okay, so let's hold on one second, everybody. Okay, let's check out the dollar index, and we can see, right, we corrected off that 127 level on monthly resistance, and right now coming into the new day, right, we're seeing some dollar strength to the upside. So it's moved down quite a bit, but we'll see, right? We're coming into a potential zone. We don't know yet, right, until we get a possible swing low in that area. But we'll continue to watch it. But the dollar did slide, right? We know that the bond yield started to decrease, so the dollar followed. So let's check out. I want to first, we'll take some requests, but I want to go through and talk about some of the things that got posted in the Telegram. So we'll take a look at the UJ setup to see how that's going. Because I haven't, it's going, oh, okay. So we just hit TP1 on that. Anybody take that setup? No? Yes, no?
I did.
You did? Awesome. Awesome. So Jeremy, Mary, okay, cool. Yeah. Bennett, okay. Awesome. Here we go. So that one is that may continue to push. We see on the DXY that is moving up. We probably may get TP2 there. So just to continue to monitor that setup. So if we take a look at it on the 4, right? Let me zoom out. You can see that we got a boost off that 382, right? And that's just following along. That's the same type of price action that you're seeing on that DXY, right? The move down, and now we're getting that pullback. So we'll see as we continue through the evening, especially with everything being tentative with the BOJ. That's a hard one to call, whether or not we're going to see further upside momentum and how fast it may move to the upside, at least back to resistance, or if it's going to turn over and go deeper, right? So if it decides now to make that turnover at some point and push deeper, that's fine, because I actually want to buy $1 against the yen anyway, and I would prefer a low price. But right now I'm playing this kind of trend setup to the upside. So we're at TP1 now, and we may see, like I said, TP2. So just continue to monitor that, monitor your stops. You might have only taken it to TP1 and you're out. You're gonna wait to see what happens. That's fine too. But it's all trade management from this point. So congrats if you decided to take a shot at that trade. We know that's looking right. So we're trying to break through structure here, and then we've got another level coming up around that 61.8 where we might have an issue. But right now it's kind of stalling at that 382. So we'll continue to watch it. And if you're a buyer and if you want to wait for the longer term swing to buy and you're waiting to see if it'll fall lower, that's a good thing too, because we see where we are on the 4. So many things you could do with these setups. But that was a good little play there. And we'll see. We'll see how it goes. All right. Just keep in mind that we do have Bank of Japan news that's going to come through at some point. Any questions on the dollar yen?
No.
All right. Awesome. So we're good there. Another one was the Euro JPY. And again, if you're at them, you just want to watch them closely. Might dance around a little bit soon, but so this is a beautiful 80-20 play off the 4, but it gave us a nice correction. So I'm ultimately trying to get long on the Euro JPY. The Euro has been catching some bids as of late. So I'm currently in a buy trade right now. We'll see how that plays out. So I'm long on the Euro JPY. What is that looking like on the 1? We're right up against that trend line, that inner trend line coming to the downside there. Okay. So you can see the same price action from the 4. If you drop your fib from the top down, you'll see how it's pushing, right? So if we're long, I'm thinking, hey, I want to see this continue to climb and eventually take out this A, okay, and continue to go. That's what I would like to see. We'll see if that occurs or if it wants to roll over and push deeper. That's why we have our stops in place, but that's the trade idea. So I'm looking for higher highs and higher lows, but you guys can see how, right, that new AB boundary, boom, right up against daily support. It's a beautiful reversal play. All right, we like those. Now, ultimately, my bias is long, so I want to start seeing the up ABCDs. And then we want to get that A taken out, and we want to see it continue to progress. So we see here on the 1 where we're coming into some traffic, and on the sub fib we've got a shallow pullback, and we're right at that 118, 127 zone. So you may see it correct, right? And then hopefully continue long. So that's where we are. It's currently a good trade so far, up on that one. So we'll continue to watch it. Any questions on the Euro JPY?
Nope.
Awesome. All right. So just, continue to manage it. It's been sitting in on all the webinars and reading all the reports, and everybody's just like, it's been a wild week. So just continue to trade cautiously, trade small, just like we always say, because you can always add to the position at a later point in time once it goes in your direction. All right, so that's that. Another one we had pegged was the Euro Swiss, and that's what it looks like on the 15. All right, on the 15, it's making this move, struggling a little bit, but it's nonetheless it's trying to get to that point. Here's TP1. So if we just reverse engineer it a little bit, here's the 4, right? And there's the play. Okay, there's the play. So we're trying to get price to reverse and pull back. We know we've got, the Swiss franc picked up some steam, but we're trying to play that correction. All right, so that's where we are there. And then that's what it looks like here on the 1. And that's that target that I took, right there. Now we got 102.36. That's a monthly level, right, that we may run into some traffic right at that 236. So we'll continue to watch that. But so far the trade's up. It's doing pretty good. That's all you can do is put yourself in the area of highest probability and take the trade, right? Take the trade. So again, that's your 15. So we'll see if we can get it to continue to that D extension and then continue past that 236 level and move to TP1. All right. Any questions on the Euro Swiss? No? Okay. Well, let's move, and then we'll take a look at the CAD yen position. Yeah. And so the reason why I took a shot at this and I ran at that I took it off that 50 is because of this daily structure here. So we got a beautiful push down, but then it's running right back into this traffic. Okay. All right. That's a pretty strong area of structure. And then we kind of halted there. So that's why when you go down to the 4, right? I know there's always the possibility for that to travel deeper ultimately because of what we have. But another thing that I saw is that the momentum, has slowed to the downside. So if I come in and I drop my chart and I take a quick look at my stochastic, you can see that this is a pretty sizable move to the downside. And now we're in an oversold position. So there are a few things that I was looking at that made me say, you know what, I'm going to try this out at this support. That's a huge move there, right? Big move. And you can see that went from overbought to oversold. So now I'm thinking, hey, maybe that momentum is slowing to the downside. And then when I go down to that 4-hour chart, it's like, man, that's in a position where we might be ready to get that bounce. Okay. So on your 4, this is that same area. Okay. This is that same area. So I'm like, hey, let's take a shot at it. Okay. That's what that looks like. So I ran that stop tight, this initial stop, because it's still like 50 pips, but ran that initial top, stop pretty tight because we are at the 50. Yep, we're at a key level of structure, but I also know that where we're at on that daily fib, right? We're the shallow retracement. It's been a 118, 127 reversal that's pushed this price down to this level. So just want to respect that because there is a possibility for us to get, a good reaction. And I had in the back of my mind, right, the BOJ this evening, and we could push down. Okay. So then if it does that, I'll take the stop there and then look to get in and take other positions because I am overall long on that CAD still. All right, but playing with a little bit of caution, considering the technical levels on the daily and the fact that we've got Bank of Japan news. So just being a little bit careful with that one. But right now it's up. So if you go down to the 15, right, you can see how that's swinging to the upside. See, just like that. So we'll see if we can continue along the path. Now, if this wanted to reverse now and get long, then you project a 1.618D extension, which is over 1,000 pips away. So we'll see. We'll see. That's a really good reward to risk on that if that were to play out. But hey, put yourself in the area of highest probability, take the trade, use proper risk management, and that's how you play the game. Any questions on the CAD yen? No? All right, awesome. So, cool. Now, if you play setups like this, it's totally up to you, everybody. So if you were to play a 15-minute in a trend line break like this, you may say, I only want to take it to that D extension. That's 100 pips. See what I mean? That's 100 pips. So it's totally up to you and your trading style. Okay, we just want to get you to those solid areas, those solid zones, so you can make a decision. That might be all you want. And then you might say, I'm taking profit here, knowing that you had the larger overall picture. Hey man, that could be potentially 1,000 pips of upside potential, but you may not want to hold. You may say, you know what, I'm gonna trade it off to 15, and when I get this D extension hit, I'm out. And then whenever I get a new fib, my bias, everything's still aligned and I'm still long. Then when it pulls back, I'll look to do the same exact thing. Okay. Or you might be the type of big time swing trader that says, I'm staying, my bias is strong to the upside. And when this new fib forms, if it pulls back, then I'm just going to add to the position. I'll add another 0.25% to the position, and I'll build out my position. Okay. So there's multiple ways to think about it. So yeah, you're up, so you're still in profit on this one, right? You're still in profit there. And then if this gets long, now you got 2 orders that's in profit. And now you're starting to, right, really adjust that stop management. Okay. And you're moving it up like that. So a few different ways to think about it. Okay. Everybody follow me, drop me a 2 in the chat. All right. Good. Awesome. So yeah, several ways you can play it, depending on your trade psychology and your style. Okay. Some people don't like seeing, right, trades, you know, pull back and draw back after you're up 100 pips. Like, oh no, I don't want that. So that's okay if you want to do that. That's okay if that's your target. Just eat away at it, right? 1 fib at a time. Okay. So that's it there. Now, another one I want us to pay attention to is this Aussie dollar, right? They got good labor numbers, but I'm still. We did hike it 75 basis points. You know, I know the yields tapered off a bit, which when you get that mad rush, that's eventually what's going to happen anyway. A lot of times, but we are pay attention because we are in a decent zone here, right? So it came here at the 50 and then it pulled back and then it made a higher high. But this one is not looking too bad, you know, because at the same time, Australia got, you know, good labor numbers. If the Dow's falling, if the risk sentiment continues to shift and it goes sour, that's usually not too good for your commodity currencies, which the Aussie is a commodity currency. So this may turn over and then continue its trend to the downside. Let me take a look at this from this morning. It's back above 20. So it's up 6.3%, almost 6.4. So this one here might be, you know, the one. So if you go down to your one, this is already at 200. That's already reacting at the 200 on the one. So, you know, this might be one that you take a shot at. See that there? That you start drawing your trend lines on. Okay. Like that. And you can play that on this 15 as you say, I know where I'm at from the 1 hour perspective. I'm around that 61.8 zone, or the 4 hour, I mean, and the 1 hour for that matter. Okay, it's kind of in the same area on both charts. So this one that you can see, hey, well, I could potentially see price pull back. It's already moved quite a ways on the 15. All right, to the D. So, you know, be patient. Hey, I get a new fib. That's going to be my low eventually, possibly. And I get a new fib and I get a pullback. Maybe I want to start taking a shot at that to the downside, right? You got a clean break there. That's already pretty decent, all right? It's already 40 pips. But we know the market will take some of that back. So you don't have to have a fear of missing out and get caught. Just wait and see if price wants to pull back a bit. And if it holds, then you look to get short. Okay. Any questions on that Aussie dollar? Oh, okay.
So you remaining short on here?
Yeah, I think I'm gonna stay short. Gonna look to stay short on this. Because with the risk sentiment being the way it is, we know the dollar can act as a safe haven too. And we just had a hike. We know Australia, they're seeing it because they got good labor numbers, which their central bank is starting to get more and more hawkish, right? We know that they just recently had an interest rate hike. So when investors see good labor data come through, that just gives them more confidence that during the next meeting they're gonna hike rates again. But I don't know. I don't know how that's going to hold up under the pressure, the risk-off pressure, because that risk-off sentiment is starting to creep up again. We saw in the article what's going on with the stock market, right? So there's a lot of doubt out there. So medium to long term, I'm definitely short on the Aussie dollar. Right? Want to short the Australian dollar versus the US dollar. So this is one that I'm saying, hey, just wait. Even if you don't go down to the lower time frame and you just wait on the 4, right? So the way you could play it, because everything is so wild, like typically you're at 61.8 now. So you can put your stop above the A, okay? Use your risk management. We take our risk and we divide it by the stop. Okay? Take our risk and we divide it by the stop. So if my stop's above the A, okay, where we are now, that is 117 pips. Okay. You take that, you're going to be trading small because you're going to divide your risk by that stop of 117 pips. But your downside on that, okay, is 260 pips. Okay, so the ratio plays out. But what you can do, especially during times like this where things have just been all over the place, back and forth, risk on, risk off, relief rallies, bond yields, everything. What you do in these situations oftentimes is, even if you're not looking to play that on the 15, that break, you can stay on your chart. What you do is you just bring it down. So you see if this is going to be the high. We want a high that's in our zone. Okay, we don't want a high down here. Okay, unless your trade plan calls for it. We prefer a high up in the zone still. Okay, so even though we won't put the stop above our A, we still want to put it above what could be the C. So because then what you can do is you can give yourself time and say, you know what, I'll wait on the chart that I'm on, and if price breaks the trend line and closes bearish, then I'm in. You get what I'm saying? So you can tighten things down a bit when you're in times where the market and price is bouncing around, right? That wash machine effect that we talk about all the time. So then you can see, hey, at the break and the close, I'm gonna take a short, put my stop above the C, because at this point, right? So for example, if you get this 4-hour candle to close and it closes lower, right, than my center wick high, then this is resistance, right? This is going to give you a new level of resistance, like so. So if I okay, just think our way through it. If it closes, this is going to be a swing high in my zone. That's going to be my 4-hour resistance. Okay. And we're all in the same area here, right? So here's that previous low. Here's your lower low. Here's a lower low. Okay. So we're in that same zone, right? We talked about that last night, being able just to identify price action and structure with no fibs at all. Okay. So this is a critical zone. So if this holds, then in essence, all I'm telling you is put your stop above resistance. Okay. See if you get a downward push in the trend line break. And I would leave the trend line just like this too. Okay. Even if you're planning on the 1. Okay. Same thing. Look at that. See how we're in the zone? Okay. That's up against the 200. Your 200 moving average is trending down. See how it was coming through price a bit, and now it's turned over. Okay. So now right now you have a high here. Okay. So some people would just take it off the 200. You got to swing high. Boom, I'm in. Right. You would be up right now. You would be right on that. Okay. Now, if not, you still can play because you got time, right? You got time. So no rush. Just run your trend line. Even on this 1, that's a break on the 1. If you run your inner trend line, that's a break. Okay. That's a break already. Okay. So technically you could be in that. But you can wait for it to push down if you want. You can wait for it to push down. But on your 1 hour, that's clean right there. Now look at it. Okay, there's your high. Now you're running that a little bit tighter. If it stops you out, that's okay. That's okay. You got a tighter stop, and then you wait, because think about it. If it takes out your stop, then what is it doing? If it takes out your stop, that means it's just making a higher high anyway, right? In the zone. So you may be that type of trader to say, hey, I'm gonna find out if I'm wrong a lot sooner than later. It's gonna make a higher high in the zone. Okay? If not, then it's just gonna continue in the direction and you're good. Right? So off that 200 moving average, it's on a 1 hour, we saw it on the 15. But on your one, off that moving average, is already down a little ways, right? Some folks are 20, 30 pips and out anyway. That might be the trade, but we'll see. We'll see what happens. But we still got, good structure going here. So we'll see if that continues to the downside. But just keep an eye on that. All right. Think your way through it. Decide what you want to do, depending on what time frame that you play on. Okay. We see this pushing back. We see that pulling back. That's why you see that here on your 15, right? When you look at the 15, we see it moving. See what we're talking about? That's the price action. That's the price action. So if it holds and it turns over within this AB boundary, and you say, hey, I'm thinking short. Okay. Same thing over and over again. Woman, that's what you prefer to do? Yeah, absolutely. Do it. Two-way. Hey, I'm either putting my stop above that A, trading smaller, letting it swing, letting it breathe, or I'm putting my stop above that C. Right? Putting your stop above that C or below it, depending on the direction you're going. That's fine. That's absolutely fine. Especially if you're cool with that and hey, I'm fine with losing the trade. I know that I'm wrong a lot sooner than later. I'll look to get back in, or I'm off to the next trade. You good with that? You can stomach that. Then that is a really, really good way to trade. All right. Cool. Any questions on the Aussie dollar? Just continue to watch it. All right. Been moving all over the place. A lot of different things at play. All right, so we'll take a quick look at Bitcoin, and it's just moving down. Man, oh man, oh man. Right. It's moving down. That's all I can say. Yeah. The extension at 10.5. That would be something to see. Okay. So that's Bitcoin. That's all I can say on that one. We'll take a look at gold. Take a look at gold. And what do we look like today? It's climbing again. Right? It's climbing again. Right? We just went over that. You got a break. Right? And it's testing the level. It's testing the level. So let's go down to the 1. Look at that. Okay. See if it holds and forms a low. 1844 broke above it, came right back to it. So let's see if it breaks. Holds the low and then continues to move to the upside. So if you're a gold trader, that's what I'm gonna be watching for sure. The way it's just sitting there hovering. See, let's continue to watch it. Maybe if it breaks, we come here, right, to this level. Definitely like the gold trades from zone to zone. So just continue to focus on that. And I want to look at the S&P. We're almost there. Almost there to the D extension. That's one awesome move. Getting close. May get there tomorrow. Wow. All right. It is interesting. Indeed it is. So that's where we are. If we look at the weekly, right into that level. See the crown right there. But look, it's corrected before. Look at that. Right? This time might be different, but look at that correction. And look what it did. Right? So we'll continue to watch it as it approaches that key level. The purple X. Oh, the harmonic. That's bearish. That's bearish. That's your swing point. It's your D. That turned over. We've been having that sitting there for a while. That's a bearish harmonic. When you got that D at the top, that's a bearish pattern. If it's at the bottom, it's bullish. Yeah. Yep. So down it goes. So hey, we traded on the way up and the way down. And the way down. This UCAD is stalling. Right, stalling under this level. So we'll see how that goes. It's just bouncing. Nothing much there. So with the time we have remaining, right? If you have requests, go ahead and put them in the chat. And we'll take a look at them before we close out tonight's session. GCAD. USD CHF. JPY. EU. Okay, so let's take a look at the GCAD. See what we got going on. All right. It's sitting in a spot. All right. I'm bullish CAD. I know it's corrected. We got oil corrected, but that's a play. Same scenario, right? So if you look at the 4, right? If you look at the 4, okay, then this larger move, right, could potentially be in play. Right? Potentially. But right now, on that 1, you get a break back below there. I'm willing to take the short on that because even if this is going to continue bullish, it's going to take back a percentage of what it gained on this impulse move to the upside. I don't know if we'll get back to a 4-hour 382. I don't. So your short-term play may be to the downside now, which is what your 1-hour chart is showing. This head and shoulders hit the D extension. Boom. We know we're there. We're here. We broke above this weekly level 159.55. You're at a 61.8. So if it breaks and closes below that, I would short it. Again, make the adjustment because of the conditions. Right? I wouldn't put the stop way out here on the swing. Just wouldn't. Okay. Oil's hitting highs, it's bouncing back and forth. The CAD overall economically is strong. They've got a hawkish Bank of Canada. We know that. Yep, we're seeing this impulse move to the upside because why? they hiked it 25 basis points. It wasn't aggressive as a lot of people would have liked to see, but they're also looking at a stagflation situation. So I understand why. Okay, we've got central banks that's kind of like with their language all over the place, but it should be because these are circumstances that are quite unique, especially with them all happening at the same time, or the squeeze from inflation, all types of stuff. So I would adjust best practice. If I'm shorting, if you could just break in this close back below 159.55, get short, take the shot. Take the shot. All right. Maybe you take your shot back down to 158.59 and play your levels. Here's the zone. And play your levels. Okay. So it's never an exact science. All right, especially in these situations. So you just adjust. So you bring things in a little bit tighter if you have to, and maybe you don't hold your positions as long. You hold them to your next level of support in this case. Okay, and if you like what you see, maybe you stay in it, maybe you reduce the trade at the level. If it breaks and it pulls back, right? Just covered that. If you break it, right, it comes down and it wants to pull back, then maybe you get back into the position. However you want to play it, but that doesn't look like a bad setup on the one. And I'm saying it because this is a ridiculous move. Right? Those swings, right? Those swings on the 4, when you look at the 4, that's a clean, right, reversal. And we don't have a 382 yet. It's a clean reversal. We just took out a high, we know, right? You take out highs, it likes to pull back. We know that when fundamental events happen at the market, when it gets impulsive in one direction, a percentage of it usually always gives it back. Okay, so on this one, okay, we get a break below, put your stop above there and see if it'll carry. What you guys think? Somebody talk to me. We're trading now. We're trading family. What do we think?
I was thinking of taking it back down to that resistance and then seeing if it was gonna come back up to take out the A.
Okay. So right here, past resistance becoming future support. Okay. All right. Anybody else? No. Okay. All right. Well, that's the pound. That's a potential opportunity there, right? So if we run it, it's a new AB boundary sitting in the zone. Yep, on the sub fit. See, look. So what happened is when you get impulsive moves, price just blows through everything. So look at your wave, A, B, C. Right? Here was your D in this zone. Price just blew right through it. So in regards to the sub fib, it's been hit an extension level. It just kept running because it was a fundamental occurrence. Now we've got a new AB boundary. So George Sand's right on the money. Maybe I take it down to what? My 382 zone. B to C move. Okay. My B to C move. And she's saying, hey, it may, right, react and push up and take out the A. Right? Should be out of the trade by then if that's your play. Okay. Or it could just be ready to go. We see cash strength. Kick back in. And we're just ready to go. Okay. See?
Vinny, I was just going to say, most times when I see those impulsive moves, what happens or what I see is it coming all the way back down. You know,
a lot of times, right? To get
Yeah.
back, right? To find that
all the
equilibrium
way back
again,
down.
right?
Yeah, but I
Mhm.
think it'd probably be safe to do that 328 to come back to that. You know.
Yeah, that 382 is right there at that support, because you got a thing, right? It doesn't look like much, but it's a pound pair. So that could be, that's 100 pips.
But yeah, and the other thing I was factoring in, tomorrow's Friday, so the volatility might go low. So that was the only
True.
that was my other what if.
True. So that's almost a 2-to-1 that hangs in right to that 382, right around that zone, almost.
So I have a question, because
Sure.
I have been trying to practice my ABCD wave, and in my mind, I'm calculating it correctly. So when it's time for the D extension, or when I feel like the D extension has already happened, and I'm assuming it's going to go back down and then shoot back up, the exact opposite happens. And it's been like 6 different pairs that I've tried it on, and I've tried it out and everything, and in my head it makes sense. I'm like, okay, cool, this is going to be the D extension, and then it just plummets.
So you're drawing your fib, right?
Yes, sir.
And you get your new AB boundary, right?
Yes.
And you're telling me it just continues to go down, or
So
it continues. Which way are you talking?
So let me see. So on the right above the 14th, the June 14th, yeah. So that would be your A. Then your next
Right
swing
here.
high is your B. And
Correct.
then the next, little low is your C.
Correct.
So when I'm expecting the D extension to come up, it just continues to go down.
This is your D extension right here.
Yeah. So can you move over just to the right a little bit? And so when I'm expecting that move to happen up, the move to the upside, it doesn't. It goes down. So I don't know if I'm just like calculating it wrong, or
You're saying
me.
you're saying that it just collapses.
Yes. And then it like breaks the, I guess formation is the word. I don't know. The
Breaks
pattern.
your A.
Mm-hmm.
Breaks the pattern. That happens, right? So one of the things that we have to look at too is, when you're doing it, do you have the overall direction right of the market at that time, right? Because it will hit certain levels, then slam and go back with the trend in the direction it's supposed to. So even right, so it depends on where you're setting up and where you're tracking, right? So if I got all types of stuff on this chart, but if, for example, okay, price, okay, is trending up, okay. Now you can have multiple fibs, right, running. So sometimes it depends on where you are in the sequence in regards to what price is coming into certain levels, right? It depends on if you're taking these ABCD waves to the upside, is this in the overall direction of the market? Is this going, right, from a C to D, right? And you're tracking these waves in the C to D push zone, like so. Okay. Right. A, B, this is my C, right? Found out my C. And then my C to D. It's going to make up ABCD waves as it tracks. Or is my overall move in the market it's a downtrend, overall. Okay. And I don't know exactly, I'm just giving you examples. Okay. And let me take that out. Just do it the exact same way. I'm in a downtrend, and price has been correcting. And I've been buying ABCDs. But I'm in an overall downtrend. And now, right, it's time for the trend to continue, and I'm getting slammed. See, like so. Because at some point, and it's hard to tell because I'm not seeing your chart and what you're doing. So I have to figure out, right? We'll have to get you on the chart, share the charts, and let you share it with the group so we can try to diagnose, right, where you may be off, right? If you're willing to do that one day. All right. Right. So I'm trading these. All right. Sometimes we're trading in areas where, well, it's time for it to reverse. And see how this would be my A, but then my A gets taken out and I get slammed, and I try to do it again and I get slammed because my trend. So we got to get the overall direction right the best that we can. Okay. And then it's just a matter of like, right, we'll take a look at, how are you drawing them manually or are you using Smart Trader?
No, I'm drawing them manually, but going off of what you said, I'm probably a little bit too zoomed in. So I'm only looking at it from the smaller time frame when I should take a step back and look at the overall trend. Because I'm doing this from my phone. So maybe that's why I can't really get the whole picture.
Yes.
Every single trade has been like 7 back to back to back. And when I'm expecting the extension to go up, I just get slammed.
Yep. You wanna try to get your computer, desktop or laptop. You don't want to do this from your phone. You don't want to do your technical analysis from your phone. And every chart that you set up, you want to do it from the top down. Right? When you're working from your higher time frame down, it allows you to do exactly what you said, and that's zoom out. So when you go from lower time frame to higher time frame, you're zooming out, and then vice versa. Higher time frame to lower time frame, you're zooming in. Right, Ella or iPad, correct. But you definitely don't want to do it to the phone because sometimes it's hard to see the overall movement. Right?
Yeah, I think I'll do that. Stop being lazy and get to my computer.
Yeah, for sure. So appreciate you being transparent, right? But yeah, you definitely want to get to your computer so you can see the big picture. You can see the big picture because this has been trending down, right? We've hit a key level of support, and now this price is pushing up. The pound is pushing up, but once that correction is over, right, the overall move is down, right? It's finding some support now and it's driving. So what we're doing is just going in and out of potential plays, right, on the short, medium, and long term. But based on this 1 hour fib, okay, this has hit a high price, right? You do have a 61.8 zone coming in line with this sub fib, this new AB boundary. Okay, so you can see some downside pressure coming in on that. And sometimes, right, people in the short term, when you get these type of moves, people is like, oh my goodness, this is extremely bullish. But when you zoom out and you see the big picture, a lot of times, nope, it's still overall bearish, but that fundamental occurrence just pushed it to its high price faster. And now it's time for it to turn back over. And a lot of times that's how people get trapped. because it's like you're late to the scene. When you look at trader psychology, you get the fear of missing out. And it's like, man, I missed it. This is going to continue long. The pound has found a floor and is running. And then you get smoked for 100 pips to the downside. Dominique, yeah. I hear you on that. You have to be patient. Yeah, and calculate it. That's it. You have to pick your spots in the market. That's why we always say, like, hey, and then your risk, right? You have to keep your risk under control. And it's like it seems so fundamental, but so many people don't follow it. We say, hey man, if you're risking 1%, you got to lose 100 trades in a row. You have to lose 100 trades in a row at 1% to blow your account. Right? So that's why we always say you need to calculate your risk on your trade before you ever take the trade, because you should be able to sleep at night. You should be able to sleep at night. If you're comfortable, if you calculate it and say, hey, if I lose a trade, I'm out 1%, and I follow all my rules, I'm okay. Because your rules that you develop are supposed to give you an edge in the market. Not after 1 trade, 2 trades, 3 trades, but over a long-term series of trades. It's never about just 1 trade. That's why you never just put all your money on 1 trade. And I'm talking from experience, because that's what was getting me, right? I was revenge trading big time when I was a new trader, because I was putting too much risk on every trade. I had to be exactly right. That's impossible in this market. That's impossible. Dominique, you got a question? Want to say something?
No, sorry, that was an accident. I have my daughter.
Oh, okay, cool. Yep. So yeah, be patient, pick your spots, the zones, right? So that's why you hear me a lot of times say, like, this is beautiful, but that's not my 382. That's not my 382, because if my rules tell me, then he doesn't trade off 382s, I trade at 61.8s. Every once in a while, like it's 50 with structure, right? Like we saw in the cat yen, like put a small position in to try to see, run the stop a little tighter. But primarily, I like 61.8, 786 is higher in the zone. Those type of trades. Okay, because look, this turned over. This is a beautiful move to the downside. But if you were projecting a D extension off of that, look what it did at U10, it pushed for a higher price. So over the years, you start to develop your rules and say, where would I, if I'm with the trend and I'm short, where would I like to trade to where I feel good taking risk and I can live with the result? 61.8 higher. I mean, the smart fib even gives you the zone. That's why it's a different color. It gives you the zone. Okay, sell zone, down push zone. So you want price to push up in the zone and then turn over, right, and start moving down, because that push you when you look at the ratios, right? So look here. Your ratios put you, your fib levels put you in a good risk to reward ratio. So I know if I was playing it wide and I put my stop above the high and I took it off to 61.8, right? Say I was in that trade right now. If I'm in this trade now, my risk 200 pips, my downside 600 pips. I'm automatically, because I let that high price get hit, I'm automatically in a 3-to-1. At a 3-to-1, I only have to win 3 out of 10 trades to make money in the market. 3 out of 10 trades. If you're using proper risk management. Because here's the thing. I might know that my strike rate, my win percentage is 60%. Right? But the one thing that you can't control, you never can control in this market, is you can't control the series in which the wins and losses occur. You can't control that. So you might be 60%, but if you lose your first 4 trades in a row and you don't have proper risk management, you just blew your account before your 6 winners. Everybody follow me? Drop me a 1 in the chat. first thing you have to do is stay in the game. I can lose trades all day, but I know out of 100 trades, I'm gonna have an edge if I stick to my rules, and I'll make money if I stick to my rules. If all I took was 61/8 or higher with the trend, counter trend, shallow retracement 120, 118, 127 zones, you're gonna make money. You're gonna make money, especially if you can stomach losses, which everybody says they can in the beginning, right? If you can stomach losses and you run your stop loss a little tighter at these levels, because then you're significantly increasing your reward to risk when the trade goes your way. Now, your win percentage may come down. Say you go from a 60% winner to 35, 40%, but the percentage of trades that you win, they're going to be colossal, right? So you get stopped out, but when it turns over in the zone and it goes your way, that one trade that you win will knock out all your losers and then some, if you're trading with a tighter stop loss. So you may say, I'll trade counter, like on this move here. Hey, it's got to be, let me clear this out. Okay, I'm trying my best to help you guys out tonight. All right. So what just happened there, but I have to redo that. Okay. So you may say, with the trend, take this off. I'm going to trade, right? And I shared my trade plan in the group, right? So you may say, with the trend, I'm trading 61/8, 786s. And you can say, well, you like to trade small, you like to trade to breathe, I'm gonna put my stop above the A. I'm play the larger swing. Or you may say, you know what? If I get a setup in my zone, I'm gonna wait for the high to form at my level, and I'm gonna put my stop right above the A. I mean, right above the high type. So that means if I'm on a 1 hour chart, I'm not going to take this trade right when it hits, like you would if you were using a sell limit. You're going to say, I'm going to wait for a swing high to form, just like it just did here. And you see it's dropping. I'm going to wait for a swing high to form. And I'll put my stop above there. You may say 10 pips, sometimes you spread. You may say I'll put it 5 or 10 pips above the high. And then I'll look to get short. And you may play levels, or you may say, my long-term target is that 1.618. So if this trade was to turn around now and continue down to your D extension, that's a ridiculous trade. You're risking 63, call it 65 pips to a D extension that's 566 pips away. Okay, that's a more timed entry. Tighter stop. And then if it U-turns on you, boom, you just lost 65 pips. But you got to measure your stop loss by your risk. So if you have a smaller account and you measure that and you say, and you divide your risk by your stop loss, and it says you should be trading at 30 cents, at 1%, trade at 30 cents. Trust me, don't do the opposite of what you wrote down on paper and said that you were going to do. Okay, you end up in trouble, right? So now I'm short. So you can say, that's my trade plan. I'll only trade at these levels. I'm going to be patient. I will navigate. I will mark up. I will do my weekly ritual. I will mark up my charts, and I will try to identify. Sometimes, some weeks, it might only be 2 trades. Sometimes it's 4. Sometimes it's 6 possibilities. I'm going to identify those, and I'm going to wait for it to get to my zone. Okay. And then I'm a short. So this U-turned and then pushed to a 786. Then if it formed a high to 786, you look to do it again. Okay. Then on the counter trend trade side, you may say in your mind, AV boundary forms. I don't want to trade the B to C move here. What I want to do is I will only trade. Okay. Giving you guys the blueprint tonight now. I will only trade if I get this shallow retracement less than a 382 and I get that classic 80-20 here. I will only trade the counter trend trade back to the 382 at this level. When I see that move happens, I'll take it, but I'm just not going to take it. You know what I'm going to do? The same thing I did up here. I'm going to wait for a low to form, 2 candles to the left, 2 candles to the right that are higher than the center wick low. And when I get that, I will put my stop. It's in my zone. I will put my stop right below it, 5-10 pips, and I will look to trade it long. Now, in this particular trade, where did the low form? Well, it's one that formed here. But somebody tell me, it formed here. You got a low. But was that my zone? Yes or no?
No.
Correct. Now, price pushed down. It pushed beyond it, right? But we're in the area and it formed a low, right? Is this more my zone? Yes or no?
Yes.
Yep.
Boom. If I get it, I take it, I live with the results. You can say, not only do I want it to get to my zone and form a low, I want to see the trend line break, right? I want to see the trend line break at that level, get me a bullish close, and then I'll take it. Put my stop below the low, extra confirmation. You might say, I want a stochastic or a MACD on my chart. And if it gets to my zone and all those things align for me to take it, then I'll take it. But now you're trading officially in the areas of highest probability. Now, if you say that those are your levels, a 61.8, a 786, right? Then when you see this here happen, this happened here, and it pushed down, you can't go to bed mad that you missed 300 pips because it didn't hit your zone. You can't do that. You can't be upset. That's why we say, right? Plan your trade, trade your plan. Stick to your rules because you keep yourself out of trouble. Now, will you find yourself trading far less because you're looking for certain zones? Yep. But I bet you any type of money, you're gonna make more money. You're gonna catch more pips. There's never been a direct correlation between trading more frequently, high frequency trading more frequently, and making more money. The key is getting you some education and knowing how to find the high probability zones on the chart and setting you some rules to them. Then the game really starts to simplify itself because now I'm not even focused on the noise. I'm just making sure that I have my charts marked up right. And then I'm going to let the plays come to me. Right? I'm going to let it come to me. So I never will have to open up my chart and go chasing. I just have to identify my potential zones ahead of time and let price action move into my zone. And then I can live with the results. Proper risk management, live with the results. Listen, if you put 20 cents on a trade because your account is small and this trade runs 100 pips, right? You've made money. If it runs to the D extension, right, for 570 something pips, right? Call it 570. You just made over $100 on a 20-cent trade. 2 dimes that you walk on when you see it in the ground in the parking lot at the grocery store. Think about that. Let alone when you learn how to add to the position as it goes in your direction. And you build on the position. Right? Think through the process. Put the time in, and you all will get it. You will get it. Okay. So some things to think about, right? Learning that slowly but surely, right? Good night, Antoine. All right. So that's your GCAD, dollar Swiss. Okay. Dollar Swiss, look at this. Crazy, ridiculous moves. And it pushed down, right? What I want to see is if it'll find a support. Right, that's the next support to the downside. So off this leg, it's been moving down. Right? Price just collapsed. So if you come here, right, we don't have it yet. This candle closed on the 4. You have a swing. You have an AB boundary. Right? You have an AB boundary. Let me see. No, you ain't got it yet. But on your 1, okay, let's go to the 1. You should have a new one fired up. That's reversing a bit. But what I want to see is ultimately if it'll push down to this support level, then I would look to see if I can get in on a buy position. So on this one, this should be that was my C. So this should be your position. A, B, C, D, A, B, C, D. So this is your fib. This is your new fib like that. It's pushing up. Okay. It's pushing up something like that. This is going to be interesting, right? That was an aggressive hike. So I want to see what happens when it starts coming into these higher levels. To see if we can get this to push down to this daily support. So if you look at it, right, you can play BBC. Right? That's a B boundary play. See those smaller positions? It's almost 60 pips. Okay, because we got a new AB boundary, price is swinging. So what I want to see though is because of the way that's traded. Look at that. I want to see it pull back and come down into this zone. And if it holds, that's when they say, okay, well, now we might be ready, right? I might find more dollar bulls. It may go from here, right? That's just the game we play. But ideally, I would like to see that pull back and then push back into this daily support level. See here in this zone? Did you see how you found buyers last time at that level? Look at that. Look at that. So what I would love to see this is for this to be, right, the short-term move on a correction and then back down and retest this support. And then we look to make some decisions from there. Now, if we do get a considerable pullback and you decide to take the short, right, use proper risk management. If you say, hey, I'm looking for this to be bearish, we've got this huge daily candlestick. We know that price at times likes to take back at least 50% of that when you get those bullish candles, those bearish candles like that. So maybe just retesting that candle, see if it's real, and then we get a sell-off back to the downside to retest that support. Okay, so that's just me looking at this double top that occurred and price swinging back to the downside. It took back just about all of it. All right, so that's where I would feel comfortable really playing along, potentially, is in this zone. Is in this zone. So be patient. Okay? It is, hey, it's bearish. That's a bearish move. But if you want to look to get short back to that zone, just wait. All right. Wait to see. Right? Just like everything else we've been looking at. See if you get a high price. And then if you say, you know what, I want to short that, then you short it. Okay. Back down to that level. And again, you'll be in a situation. It's the same thing, no matter what the pair. It's the same thing. Either you're putting your stop outside the A, or you're putting your stop outside that C when it comes into your zone. Okay. Same thing, same rules, everybody. All right. This is where you get we're right here on this move here. Yeah. Yeah, because look what it did. Look what it did. Look at the pattern there.
Yeah, on that that second top there, I was expecting it to go up and it collapsed.
But listen, that wasn't a bad play. It got bullish, but there's no technical structure that will ever stand in the way of a fundamental occurrence. So don't be hard on yourself. Don't be hard on yourself because that they came with a surprise rate hike. They hadn't raised rates in 15 years. And not only did they raise them, they came strong. So you can't, hey, you live with those. You live with those. Look, that was good. That swing was beautiful. Think about it. You had bond yields going through the roof. Dollar was raging. So of course I could buy a pullback and a continuation. Hey, we get beat. We take L's. So yeah, that move there, that caught a lot of people. That gobbled up a lot of people. Don't worry about it. Don't worry about it. It's all good. Just keep working.
So
Keep
question,
working.
now
Sure.
that it's reversing, how do you do the ABCD wave going down? Because for some reason my brain can't grasp that. I can go
Right
up,
here.
I can't go down.
Right here. So you see this here? ABCD wave. You see how this is forming here? At the close of this 4-hour candle, right? You already have it on the 1, but your 4 hours, your larger wave. So you see this low? If that holds, that's going to be a new swing low. Okay, that's going to be a new swing low. This one isn't counting as a swing low because this price right here on this one was actually lower than that. So you didn't get your swing low there. So what you're waiting on is for this candle to close, and then your fib is like this. See that? That's going to be your high. That's going to be your low. To throw you off a little bit when you get those impulsive moves, but you have to wait for the low to form. So if this closes, you're gonna have 2 candles to the left, 2 candles to the right that are higher than your center wick low. It's gonna be your fib. And then you see if price wants to pull back. So typically it'll do a couple things, a few things actually. It'll give you the deep pullback right away off the B boundary, right? So this is my A. Right? That's my A. This will be my B. So now this stays solid. Once you get that low, it's either going to make the correction and start waving up. Start waving up in your zone. Like that, right away, right off the B boundary. Or sometimes what you get is you get a price to do this. They give you a slight push up, like 23%. And then it'll push down like this. Boom. That's our 80-20 play. Okay. And then what it'll do, it'll stall around a little bit, and then it'll push back up. And with these plays, right, we like to buy those back to at least the 38.2, to at least the 38.2. Okay. Now, if you're short and you don't play those, then you're just waiting for a high price anyway, because then you want to sell high and get short. Now, sometimes the market is so strong in a particular direction that you don't hardly get any type of pullback into the zone, and price just does one of these on you, and it just continues down, okay, to that D extension. Okay. And then wherever that low forms, that swing low like that's forming here, then you're just going to have a new AB boundary anyway. So say that occurred and it pushed down and it just kept riding. And it pushed down to this level and then it formed that low. Then you take it from the highest point within the AB boundary, which was very shallow, and then you run it like that. And then the game begins again. All right? That's how you do it. That's how you do it. So we love when those AB boundaries set up because we know typically it's going to do one of three things. Right? You can have a few scenarios to play out. And you could set your rules around that. I don't like to play the B to C's. I do like to play the 118, 127s, but I'm not going to limit in there. What I want to do, right, is I want to wait for it to settle. And then if it starts moving in my direction, then I'll take the buy back to that level. Okay. Or I don't like that at all. It can do whatever it wants to do, but when it gets back into my zone, if I'm short and it gets to my high price, then I'll look to get short on it to the downside. It's only a few scenarios that you have to master, really. Okay. A few scenarios that you have to master with the fibs. That's why I like them. Once you get it and you pull it all together, it becomes very, very simple. It becomes just a waiting game, right? To see what the price wants to do. Okay. All right. So that's where we are on a dollar Swiss, Aussie yen. I'm going to take a look at that. Scroll up. This thing is just all over the place. Okay. Aussie getting some strength. So let me back out where we at. It's a tough one. It's sitting at highs, right? So it made a higher high on your weekly, but it's been pretty bearish, just holding up. So it's kind of bouncing around. So see here, that's a hard play. All right. What I would say on this is that there's better plays. You want to see it break out somewhere. So if you're struggling to try to find a path on it on the lower time frames, it's because it's dancing in between this weekly and daily level. It's 92.66 and it's 93.93, right? Which that was a target that I had to actually short before, but it's moving. See how it's moving sideways? That's really no play on that. You need a break. Look at the indecisive candle here, and it's just bouncing. See how tight those candles are? Look at that. See how decisive this was? See how decisive this move was to the upside, then to the downside? Now look, you got to fight between your bulls and the bears. They're trying to figure it out. Okay, so it could break higher or lower. So this is one. See what it's doing? See how it pushed down? That was that impulsive move on your 4, and it took out your A, and now how it's just bouncing. That's because you got sideways price action going on your higher time frame. That's all this is right now. Okay, so it needs to break out and make a decision. So if you clear this out, right, clear out all of this mess, okay, and you just look at where we're at price action wise. Okay. Here, you see how it's hanging at this level? Okay. So one of your smaller players may be like, okay, I got this identified there, and it's holding. So here's 93.93. So now I might say, here's resistance. That's 4-hour resistance there. We can see that. It's 4-hour. So this may be, hey, it's trying to decide what it wants to do. I needed to break out of these levels. This might be you're breaking your retest setup. Right? But we get price to break through, see if it wants to hold the zone. You see how it's still holding that trend line? Okay. See if it wants to hold the zone and continue long. Because now, right, I got 2 scenarios. See, now I've got it framed out. If I break below this 92.66 and it comes back and it holds, then I'm down, right? Because we've got that sideways movement. Look at the daily again. Look at your candles. That's just range bound. So you need price to break out. So you try to. Look at that. That's one to study there. Tried to break south, didn't like it. Tried to go north, didn't like it. It's like, I don't know what to do. I'm just going to sit here. Okay. But eventually, a decision will be made. So what I just showed you on the lower time frame with the wave is the same as saying, if I get a break and a close, right? Above 93.93, especially if you get a higher close, right? Than your previous candle. And it's actually closed out. You see how that didn't stay? Became a wick, but that's the high, right? If you get a higher close above that, then you can say, hey, I'm up. I'm moving up to 95.74, you know, potentially higher. Same thing with this with this area below. Same thing. This is a good one here. It's a good one to gauge. Okay. Where price may want to go next, but you need a breakout. So that's it on the Aussie yen. That's that one's a little choppy right now, but it'll figure itself out. It'll figure itself out. Be patient. So that's the Aussie yen. Dollars. I mean, the Aussie Swiss.
So if you were going to set an alert on that, where would you set it? I mean, how far up or down?
On that Aussie yen.
Yeah, on the consolidations, any consolidation for that matter.
Yeah, you might just want to put it. You might want to, and these you might want to just put an alarm, right,
Well, yeah, that's
above
what I
your
said.
level. Yeah,
Okay.
like either above or below your levels, just so it alerts you, and you can say, oh, okay, you know, or even if, like in this example here, on your lower time frame, up above this candle here. So let me put these. I'll do this. See it? See, these are your daily candles.
Okay. But you would set
Right.
the alarm on the daily and not.
You can set it here. That's giving you the same thing. See these levels I got drawn? This is that daily candle right here. You see that?
Okay.
Right. You see that? So you could do it. You could do it on whatever time frame. We've already got the levels identified. See, I marked that out as a 4-hour high, but that's the high of that daily candle. And then here's
Okay.
this low. You see what I'm saying? So you can put horizontals in and put an alarm on it. Right? Like oops.
You know, but you would have to be at your chart to see that, you know, if you didn't have an alarm. So that's what I was saying.
Right. If you didn't have an alarm. What or you know, like this here is a 4 hours. So you may say, I'll let it alarm me. Or when you wake up, if you see that it broke this level, then you can go down to your lower time frame and wait for a pullback for it to retest that level. So you got time.
Okay.
You know, and if it gets real impulsive, if everybody was thinking the same thing at that level and it gets impulsive and it just explodes and it starts catching bids to the upside, then you just miss it. You just miss it, you know, or you have to wait to see if it'll correct itself. But a lot of times you could tell by how fast price starts to move in a direction if that was the key level that everybody was focused on, right? Because we're just range bound. We need to break out, and some people only play breakouts and retests of a range, so they want to see a breakout and retest it anyway, right? Somewhere in that zone to see if it holds. So you're just range bound, and those are the ones that are funny where you just have to, when you zoom out and you see that, you just take your fibs off and you just draw horizontal structure because it's moving horizontally across your screen. So a fib, which is tracking waves on the trend, is not going to really help you.
Yeah.
You know.
All right.
So
Thank you.
you're welcome. You're welcome, Jeremy. If gold goes up, if the VIX goes up, it's mean gold is bullish. Depends on what the concern is, on what's driving the concern. So I would say it depends, right? So you think, because sometimes we think risk off gold, right? Gold hedge against inflation. Gold, when times of uncertainty, people put their money in gold. But as we've seen in these last couple of cycles, that hasn't always been the case. Hasn't always been the case. So it depends on what's driving the sentiment in one direction or the other, right? So you always have to do the research on that, because we know that the dollar can act as a safe haven too, right? And you trade XAU USD, they're paired together. Okay. So it doesn't always, what we're finding now in these cycles where we got so many variables, war, supply chain issues, right? Inflation, all going on at the same time, coming out of COVID, right? Things like that. Because we have to remember COVID, China's still having lockdowns. Okay, and other places probably should too, but they're not. But the thing is all of that stuff is happening at the same time. So what we're discovering is some of these normal fundamental correlations that have been tried and true for decades aren't always playing out the same during these times. Okay? So sometimes it's situation. You have to look at each situation on its own, right? On its own, and that's why we say we trade what we see, especially during these times. So that's a great question, though. Really good question. Yeah. So Aussie Swiss, let's take a look at this one, man. This one, right? Playing a pullback on that. See if we can get back to that 382 or higher. It's kind of moving sideways, and makes sense, right? You got I trade because we're in the zone, and you got the break back above this level. But hey, the Aussie and the Swissy is strong. So sometimes you get that sideways push. Somebody's going to win, and I prefer that the Aussie wins to the upside on that. So that's where we are. But let me look at the 4. This was the one, everybody, that I canceled my sell stop order. My additional sell stop, I pulled it off because I wasn't sure what was going to happen. I had an order going, and then I pulled my sell stop out below 68.63. All right, so I could have picked up somewhere on that, but that's where we are. We're coming into support, so we're thinking correction and a continuation down. So we'll see how that goes. We're just running into support. So you see this, right? So think about that. How you run your sub fibs to the downside. Look, A, B, C. My C is at 8.6. The extension was hit. Here's my new low. Should be forming a new sub fib. Right? We got it on the 1 already. Right? So we don't have to worry about it here. Smaller wave has it. And look. So we're looking for a pullback and a potential continuation down. Okay? So if you're not playing this, then you just want a high price. You're saying, Benny, I'm staying short on this Aussie Swiss. Just see if you can get a high price to your level. And then you look to get short. Multiple pairs, same process. So this is right now is coming off that 127. Let's see if we can get it. See if we can get it to get back to that 382 target. That's where we are. Okay. That's the Aussie Swiss. And then we'll take a look at any questions on it. I'm sorry. You're welcome, Jeremy. It is the Wild West right now. It is. It is. So you're welcome. But that's why we say, hey, you make adjustments. It's like going in at halftime of a game. Like, you know what? This team knows everything. We played them 5 times this year. They know everything that we're doing. We got to make some adjustments. Right? We got to make some adjustments. So bring your stop down. Maybe you trade with your stop above or below the C, depending on the direction. Okay. Maybe the normal risk that you'll take, maybe you usually risk 0.5%. Maybe you start out with 0.25%. All right. Thanks for the feedback, Brandon. All right. Appreciate you being here. So you got to adjust your game. Adjust your game. Rule number 1, protect your capital. All right. And that doesn't mean that you're not going to lose the trade when we say that, but we want to make sure that we want to avoid colossal losses at all costs. All right. That's what we want to do. This Euro USD, I expect it's in the buy zone. We don't have a daily 382. This was hard to call, right? So when they're hard to call like this, so you can start playing levels. So we got a double bottom. We don't have a daily 382. The way the dollar has been bullish back and forth, acting as a safe haven. Bond yields going up, dollar going up, bond yields go down, dollar goes down. Euros catching bids because people think, hey, they're going to get aggressive with the rate hikes come July. We know there's one coming. As before, they weren't talking about raising it at all, but now it's just a matter of how aggressive it's going to be. So what you could do is you could just play levels at times, right? So we've got this 105 level that is tested. You could say to yourself, hey, man, on this daily, I got a stochastic that's in the buy zone. If I get a break and a close 105.69, then I'm going to look to play a bullish back up to the next level. Just play your levels sometimes. Okay. Just play your levels. Because you see how this is here? Look at this. See how that's hovering? So just, I got to put that back. Let me delete it. I'll remark my chart up. So sometimes you just play your levels. So you see how this is pulling back? Right? If you get a break above, hey, I'm looking probably to go to get back long. Okay. Or if you're a long-term bear and you're swinging, then you're just staying bearish anyway. Right? There's parity. Okay. But this is bouncing all over the place. See, look at your one. Look what that did. Look how that took that out. Okay. So let me get these cleaned up. So you say, hey, maybe, all right, I'm watching those levels and let's see if it wants to maybe go a little bit higher, right? Well, we can all see what just happened there. We got that push. See? And now, yeah. So now it comes down to, man, what's my bias? Let me go back up here to this daily. So I want to get these levels again. So it's the daily 382. I need to take these down to my one. Did I not link them? There we go. Now we got a break of a trend line. Okay. Here's that, it broke it, did break it. All right. So a potential play here is this is correcting. I got a daily stochastic in the buy zone. Where's my there's my 4-hour 382. Well, my daily 382. Yeah, it's my daily. So I may say, hey, this may climb. So a good area that it broke was this one here before, this zone. Okay, straight across here. So a potential play, if you think, hey, this might have more upside on the correction. Hold on. Is my box gonna work tonight? I don't know. Anyway, this zone here. Look at that. So you may say, you know what? I think that would get price to come and swing back down in this zone. I think it wants to push higher. It just snapped this level, 105.69. Actually closed above it. Now it's correcting down. So what you can do is this. You can draw your trend line like so. The downside. And if this level holds, you take your shot. Boom. And what you do is you say, this has been volatile. The dollar is doing a little bit of everything. So you just tighten your stuff up. Like that. I get a swing low in the zone. I've got that identified. Hey, I'm gonna be asleep tonight. Well, put you an alarm on it. Set you an alarm up and say, once it equals that, every 5 minutes, I want you to just tell me everything. Send it to my phone, send it to my email, and save and run it. Now, the thing with Smart Trader is you want to leave your computer on. Don't let it go to standby, right? So adjust your settings. You want to let it run. So then it'll go off. You hear noise going off, an alarm, and right, and it'll send it to you, send you a text message, and send it to your email. Okay, so you'll hear it, and it'll send it to 2 different locations, and that'll identify, at least alert you that is at this level. Now, it might not be ready to take the trade because you want to swing low in the break, so you got some time, but now you know that it's back at my level, and I want to watch it. All right. Any questions? That's a big tip for sure.
Hey, does Smart Trader have an app like TradingView for getting alerts on the phone?
To be honest, I don't know. That's a good question. I will research that. I should know that because I've been with them forever.
Yeah.
But I never
because I haven't been able to get
never,
anybody's alert on the phone, so I can't figure that out.
yeah, I know with me with Smart Trader, the issue was it wasn't I kept letting my computer go to standby, like sleep mode and stuff.
Yeah. Okay.
And I wasn't and it wouldn't send me the signal. So that's how I learned that. But I'm usually like, now what I'll do is typically I'm always going to like the website on my phone. But they may have an app though. I never even thought about that. I've been doing it this way for so long. So
Ryan just said they didn't, so that's
they
fine.
didn't. They didn't.
Okay.
Thanks, Ryan. Yeah.
Thanks to everybody. Okay.
Yeah.
Thank you.
So, so that's the Euro USD. Now, this 107 level, this zone, no matter how many webinars I get on, they talk about the Euro USD. They talk about the 103 and they talk about the 107, right? 103, 107, 105. Those are the levels typically that you hear them saying, like, hey, if we get a break back above 105, we may be going, and then we target to go to 107, from 105 to 107. And if we get a break below 103, then we're probably going to look to go south to parity. So that's what I keep hearing. But this could have further upside momentum, which is fine. Play it either way, right? If you're short, then you wait till it gets to a high price and then you look to short it. Same thing. All right. So that let me scroll back. I think that was it. Yep, the EU was the last pair. So any questions over anything that we covered this evening? Good. What happened with the yen? Because my EJ trade is doing pretty good. And so is the CAD yen right now. Nothing. Anything? Nothing. Ella, you're welcome. I have to look that up, but I don't know. They're moving pretty good right now. So we'll continue to watch that one closely. So that's it, everybody. You all have a good night and have an awesome Friday. And continue to look at the Telegram because we'll continue to post anything that we find, any type of favorable setups. All right. Have a great night, everybody. Thanks for hanging in there with me.
Thank you.
Welcome.
Thank you.